Hi, my name is Rupesh Patel. I manage Tata India Tax Savings Fund at Tata Asset Management. The fund is managed on bottom-up basis with no sector or market cap bias. Generally, the fund would look for companies with attributes like long runway for growth, leaders in the category in which they operate, or have potential to surprise on earnings growth. It is my belief that long-term wealth is created by buying businesses that can compound at a reasonable rate over a longer period of time. Accordingly, keeping the portfolio churn low and willingness to ride through near-term turbulences are some of the key characteristics of our portfolio construct. Fund also actively looks out for contrarian opportunities with favorable risk-reward. These opportunities may arise on account of market-specific or company-specific events, leading to significant gap between fair value and market value. The holding period in such cases may vary significantly. Coming to the tax savings funds in general, investors tend to look at them as just one more instrument to save taxes. Yes, it is true that investments in tax savings are exempted under Section 80C of Income Tax Act to the extent of 1,50,000 rupees and is locked in for 3 years. However, I believe investors should look at ELSS fund as an instrument to take an exposure to a diversified multi-cap equity portfolio with no restriction on amount which can be invested. Further, a 3-year lock-in should not lead to investors restricting their investment horizon to just 3 years. Instead, it can be 5, 10, 15 years. The longer, the better. The 3-year lock-in should be seen as a feature which would force an investor to look beyond near-term volatilities and think long-term. As I do my bit by following a disciplined approach, investing for longer horizons and remaining invested through volatile times would be my recommendation for you. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.